All right, what's going on, everybody? Welcome back to the channel. It's Millennial Trades. It's January 3rd, 2023. What a way to start off the new year. I woke up this morning, everything was up. The indexes were up. The individual stocks that I follow were up. The dollar was up. The bonds were up. Gold and silver was up. The only thing that wasn't up was like oil. So it was kind of like, well, what do you trade? Do you go long? Do you go short? I'm going to get into the topics here in a minute, but real quick, I did take a quick scalp. I went long on Amazon right at the open. I was in the trade, scaled in at about 9:30. I was out of the trade by 9:40. So it was a fairly stress-free trade. I didn't catch the entire morning rally on Amazon, but there was a supply zone, and Amazon went pretty deep into this supply zone. Right, I want to say at like the $86, $87 area, because I had like the $86 calls. But it quickly contracted pretty much for the rest of the day. There was a small rally, didn't get quite as high as where it was this morning. But yeah, stocks, the indexes, everything just sort of pulled back. It looked like we were going to have a great day in the stock market. European stocks are still up. I think Europe is, they have their second, the European stocks are up for the second day. They're up another 1%. So that's 2% in 2 days for Europe. I think even some of the Asian stocks are up. But the U.S. stocks just kind of buck the global stock rally for right now. And this is heading into the FOMC minutes and the non-farm payrolls. We're going to talk about all the data here. But, almost $700 I scalped on Amazon. It's like over 12%. It was almost 13% in the account. So I got in, got out. Got away from the markets, went to the gym, just enjoyed the rest of my day. This is why I'm trading, so that I can actually have a day, right? So I don't have to spend all day looking at a computer or, that kind of thing. So what I want to cover in this video is the dollar. We had a great day for the dollar. I think I'm going to title the video like King Dollar Crushes the Stock Market or something like that. I also want to talk about the recent comments from the EBC about interest rates and how long they might take to take effect, how long it might take these rates to actually affect the economy. And then we'll kind of get into, some of the data that I'm going to be looking at or looking out for the rest of this week. It's a big week, big economic data, and also some of the, I guess you could call it political situations with the strikes in the UK, actually on both sides of the pond. We've got strikes underway in the UK and also in New York City. The nurses want to go on strike. So we're going to talk a little bit about that. So yeah, I hope you guys are enjoying your new year. We're finally here. Give the video a like. Follow me on Instagram at Millennial Trades. And so U.S. stocks start the year on a sour note. They're pretty much bucking the global rally right now. Even European stocks have been up 2 days in a row. So they're up like 2% in the last 2 days. We did get some inflation data today. Let's talk about the data real quick before I talk about the dollar. We got in Europe, Germany's inflation rate, which actually slowed more than forecast. So the annual consumer price inflation, the CPI in Germany, fell to 8.6% in December from 10% that was reported in November. And that was way below the market forecast. I think market forecasts are like 9.2%. So this could be an indication that inflation is slowing a little bit. It could kind of be maybe a foreshadowing of some of the CPI numbers that I think we get CPI next week for the U.S. Maybe this is an indication that our CPI will come down as well. Long term, though, how are they going to bring this inflation back down to 2%? It just seems like we're a long ways from that. And how long before the Fed raises their average inflation target to 3% or 4%? Is that possible? I think it's definitely possible. But you also had the Chinese manufacturing numbers, right? That contracted. Obviously, the S&P Global Manufacturing PMIs came out as well. Where did I have that here? Well, yeah, China's factory activity extends declines on COVID surge. Now, supposedly they're over the peak of COVID, but obviously the Chinese virus just went through all of the factories in China. And so this has probably been a huge contributor to the Chinese manufacturing contracting as much as it has. But also global manufacturing slumps continue at the end of 2022 as output and new orders fall further. They keep blaming this on the pandemic, but I can't help but wonder if that's just sort of like the cover story here. Maybe there could be other political reasons for manufacturing contracting as much as it is. But, we are still very dependent on China and probably will be for some time. But yeah, the numbers are still contracting. How long is this going to go on for? One can only speculate. And then tomorrow, what we have coming out that I'm going to be watching for is the non-farm payrolls and the Fed minutes. Obviously, we pretty much know what the Fed did at their last meeting, but the transcripts come out tomorrow. Maybe the algorithms kind of get triggered by this. There might be, some crazy volatility. Might not be as well. We could have kind of I almost anticipate a very choppy market. With some volatility, but overall just kind of choppy. I think we might just lack solid direction until February, where we get more rate hikes. All right, maybe I'm wrong about that, but I think January could prove to be kind of choppy, if not still pretty bearish. The Santa Claus rally if you want to call this the last couple of days the Santa Claus rally, okay. But it seems to be over. We're making new lows on the S&P 500, like on the 30-minute chart for the futures. I think we made new lows, recent lows on the NASDAQ as well. They just don't look good. The charts look unhealthy. There's no real momentum. None of these rallies are really getting respected. And I think we still have a long ways to go. So yeah, let's talk about the dollar, all right? Because this is the highlight of my day. We saw the dollar have an incredible day. Up 1%. It was up over 1% at one point in time. The DXY, the Forex pairs as well, the euro falling against the dollar, the pound falling against the dollar. So this is all good, right? This is great, for me, because I have a lot of dollars right now. But the dollar makes a strong start in 2023, and this is after a huge slump in November, a little bit of a slump in December. A lot of people, even Peter Schiff, is still saying the dollar is going to be plummeting in value. He says this every year, though, so I guess if he says it enough, he's going to be right. But it's looking like the dollar's ready to start moving up again, especially with the stocks pulling down. You've got commodities like oil coming down. Gold and silver have been up, which has been kind of weird. You see gold and silver up, and then oil, but we're talking precious metals versus energy. So yeah, just good to see this. Obviously people aren't going to be happy about this, especially the longs in the market, the longs in stocks and cryptos and bonds and all this. But the dollar it looks good. The chart looks good. You guys let me know what you think. But I think the dollar looks good, at least in the short term over the next few months. The candle today was incredible. Obviously, anything could happen. We could put in a red candle that's down 2% tomorrow, and erase all of today's gains on the dollar. But I tend to think that's not going to happen. But even the dollar chart, like with the markets being choppy, the dollar's been pretty choppy too the last few weeks, the last month. So, but it looks like it's taken a turn for the better. Now the comments from the ECB. So there's a guy named Joachim Nagel. All right, he's one of the he's basically the president of the Deutsche Bundesbank, which is a member of the governing council of the European Central Bank. And he said today that a lot more action is going to be needed from the European Central Bank to deal with inflation. And then he went on to say that, yes, there's going to be probably slower rate hikes, but still more hikes to come. And that the rate hikes take 18 months to 2 years before they actually take effect in the economy. So if you think about this, and again, I have my doubts as to how much the Fed or the ECB actually does control consumer behavior or control prices. I just have my doubts, but I do also believe that there's going to be, if there is a great effect here from the interest rates, there's going to be a lag effect. It's going to take 6 months, a year before you see the true effects of the rate hikes that happened, months ago from now. So the fact that you got the ECB telling us this, and I think Christine Lagarde has talked about there's a lot more work to be done. Jerome Powell's talked about there's a lot more work to be done. We have probably a long ways to go as far as this, getting the inflation down and the effects on the economy, the effects on the manufacturing sector, the effects on the stock market, the effects on the housing market, maybe even the crypto market as far down as it is. A lot of these markets probably have a lot further to go. They're going to be under enormous pressure in 2023. So I'm not going to delude myself into thinking that we're going to see any crazy rallies because, 2022 is over and we can move on. No, we have a lot of turmoil ahead of us, I would tend to think. Also, Nagel from the ECB pleads with Germans, and this is an article from 2 weeks ago, but he pleads with Germans for patience in combating inflation. I mean, these European countries are so... their currencies are just so much weaker. They're, they've got the energy issue because of the wars, and they also have their own problems with population and stuff. You've got mass-wide strikes going on in the UK. Obviously, the ECB is going to be pleading with these countries for patience. Please, just be patient with us. We'll get it together. Who knows if they ever will. The reason I think all these people in the UK, I mean, you're talking about nurses and train workers, all kinds of like EMS workers, I think even firefighters, police, all different sectors in the UK. They all want to go on strike. There's more strikes underway as of starting today, I guess. UK faces new wave of strikes as workers fight for higher pay. Their currency can't keep up with inflation, and it also can't keep up with the power of the dollar, at least for right now. And so this is why they're demanding higher pay. But these European countries, they're in a lot of trouble. Not to say that America isn't, because you've got nurses that want to go on strike in New York and want higher pay. It's just the times that we're living in. And again, I am very concerned for anybody that has to play the wage game, because I just don't see how you're going to... We know that the central banks want to, pummel your wages down into the depths of economic depravity. So if you're playing that game, there's just no way you can win. There's absolutely no way I don't care if you're... Doesn't matter what you're doing. If you're playing the wage game, it's going to be extremely hard to... economically and financially thrive in these very just unprecedented environments that we find ourselves in. So, we talked about that. Let's see here. I wanted to hit this too. The stock and the bond markets in 2022 are down $30 trillion. All right, $30 trillion. I mean, that is just brutal to think about. Like in 2021 to the end of 2022, we're talking $30 trillion just evaporated. And that's not just the retail's wealth. You've seen billionaires like Elon Musk. Elon Musk, I think, is the first billionaire to lose $200 billion. And he's probably going to lose more. Maybe some of his decisions have, maybe led to this. But, he's also the victim, I suppose, of circumstances like in China where, the manufacturing. Obviously, when you see the manufacturing numbers contracting in China, this is not going to be good for Tesla. I think Tesla is having severe production issues, and they're missing on their, production estimates. Tesla's just a mess. Elon Musk is a mess right now. He lost $200 billion. So it's even the wealthy have taken a nice haircut here as far as wealth is concerned. So to think about all of that wealth just evaporating within a year, what does 2023 have in store for us? I'm wealthier in 2020 or, at the end of 2022 than I was at the beginning of 2022. Not everybody can say that, and so again, it's just, I mean, it's going to be very, very hard to win, right? Even if you're trading and you think you got a good system, It's extremely risky. It's extremely hard. So we're playing a dangerous game here. Whether you're playing the wage game, whether you're a billionaire, or whether you're a degenerate options trader, this is an extremely dangerous game that we're all playing. And I think all of us can feel it. There's you could see it in the U.S. equities markets. There's no sense of optimism. We're over the hump in 2022 and just absolutely no optimism. So we'll just have to see where this goes. Okay, so that pretty much sums up everything major that I wanted to talk about. Real quick, just a couple more stories here. Sam Bankman-Fried pleading not guilty to all charges in a New York court. This guy, I guess he was trapped in the Bahamas. He should have just gone on the run. Federal prosecutors have a conviction rate of 95%. All right. And they're particularly confident on this case, apparently, right? Or else I don't think they'd go through the trouble of arresting him. There's all sorts of theories out there about what's really going on here. But yeah, let's see. He asked to keep confidential his $250 million bail guarantors, and the judge granted the application. So he's out on bail too. That's the other thing too about this. He's out on bail. Sam Bankman-Fried. That's one of the craziest stories. FTX collapse. All the different theories surrounding it. That was definitely one of the craziest stories in 2022. I'm not involved in crypto, really. I'm not involved in FTX or anything like that. So, me personally, I think it does affect us. That's why we do keep tabs on this story, because the liquidity crisis at FTX, the funds that just were not there. This is we're probably going to see this definitely in other crypto markets, but we could see it in the banking sector. There are rumors and whispers that these kind of liquidity issues exist, in the banks. Here's another story about California. They want to raise taxes in California and make the taxpayer. Let me just read this to you. California joins several states covering doula services. Doula is basically like midwife services for low-income mothers and babies, right? And they talk about low-income mothers in the headline, but then listen to the first sentence, which is very weird. Advocates say one way to address the high rate of maternal deaths in the U.S. is to increase the support for pregnant people and their pregnant people. You already said mothers. You already said maternal. Why are you going full-on retard Marxist and calling them pregnant people in the first sentence? It doesn't make any sense to me. But anyways, the taxpayers in California are going to have to pay for other men's children, right? Especially the men that are irresponsible. They're probably in prison or they're selling drugs. Definitely not taking care of their pregnant people. And now the California taxpayer is going to have to pay for this. So watch out for more of that. On some good news in the United States, I think like 25 states went constitutional carry. So you don't need any permits. You don't need concealed carry licenses. 25 states across the nation are now constitutional carry. Tennessee is one of them, West Virginia. So that's good to see. That's definitely some optimism here that at least the Marxist insanity hasn't taken over the entire country yet. And the last thing I've been meaning to talk about this, guys. I know these stories are a little bit random at the end here, but I didn't want to just hype on all the economic stuff on this video. But one more thing here. There's this new app called Rocket Money, and I see a lot of these traders and content creators, pushing the Rocket Money app. And I see a ton of commercials for it. It's basically an app where I guess people have like thousands of dollars, people out there just subscribe to all these different movie services and all kinds of weird stuff. And then they lose track of what they're subscribed to. They don't know how to cancel it. So they're paying like thousands of dollars every month in subscriptions they're barely using. So the Rocket Money app supposedly, rounds all this up for you and you can cancel these subscriptions. But to me, it's just like, how stupid. This is just too stupid. You need a whole nother separate app to help you manage, all these subscriptions that you don't even use. It makes absolutely no sense to me. But this is like the modern, consumer just consuming without consciousness, signing up to all these kind of things over the years. And people are just, they're paying like $1,000 a month on, Paramount subscriptions, Netflix subscriptions, Amazon Prime subscriptions. I mean, how many different streaming services do you need? Spotify. I mean, so yeah, this Rocket Money app, I'm seeing a lot of people talk about these, they're called budgeting apps. You guys let me know what you think. I just think it's too stupid. You need a whole separate app to budget your money for you. If that's the kind of situation that you're in, you're in deep trouble if you cannot even budget your own money without the use of an app like Rocket Money. All right, so that's pretty much everything I wanted to cover in this video. I'll keep it at 20 minutes. You guys enjoy the rest of your evening. Thank you for spending some of it with me over here on the Millennial Trades channel. We talked about the dollar. We talked about the ECB, pleading with the Europeans to be patient because the full effects of the interest rates have not taken effect yet. We talked about the strikes on both sides of the pond. We talked about the economic data coming out. We talked about the non-farms, the Fed minutes. So one can only speculate how this is going to play out the rest of the week, the rest of the month, and the rest of the year. But you guys let me know your comments in the comment section down below. Follow me on Instagram at Millennial Trades. And as always, until next time, I'll see you on the next video.